Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 6, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have another follow-through day after a late day, what's called rescue operation from an afternoon sell. We had some interesting intraday activity today. We'll get to that in a few minutes because they did do what? They went to the numbers. We'll get to that in a few minutes. Let's focus on the big picture. We're coming toward the end of the week. Let's once again look at the weekly chart and say, what do we have? We have a situation where the trend is your friend. I can't say this enough. When there's nothing wrong with the tape, there's nothing wrong with the tape. Once again this week, she came back to run a test of the 20-period moving average until proven otherwise. It's a bullish tape. She bounced right off of it all throughout the week, each and every day, one day jumping higher than the next. And the result is right now on Thursday at the highs of the week, you could see the daily chart here where each and every day we see what's called progression. And let's go look at the next major area that they're heading to. We do have a couple of things going. So we have a trend line situation. Here's where the market can still make a lower high. There is a trend line. It is valid above the trend line. They will go retest the former high, which isn't that far away. It's a flat-ish type of trend line. So we've got one thing. We have a couple of other things. We have a breakdown candle high that's at 609.96. Fair enough. But what happens if we go to other time frames? Let's go down one notch to a half-a-day chart, and we see what? We see a breakdown candle high that comes in at what? 607.03, a little bit lower than the other number. The other number was, we'll call it 610. This number is breakdown candle high 607 and a few pennies. We'll call it 607. For argument's sake, it's kind of where they are right now. Closing print on the day was 606.34. Selling a little bit in the aftermarket. I think Amazon was reporting. Let's take a sabbatical and go over there. Let's see if Amazon reported. They're trading at 232. Would they close today? Around 238. So we go down to the extended hours trading. And Amazon's trading down a little bit, but in 5 minutes they could be trading up by $10. We'll see where they are in the morning. We'll see if there's an opportunity in the morning. Doesn't really matter what they do right now after hours. Back to the 4-hour chart, and this is Amazon. Let's go back to the 4-hour chart of the SPY. And as we go down to these different time frames, the light bulb should go on saying, hey, look at that. There are different breakdown candle highs on different time frames, and guess what? Each of them are important. Guess what? Now you start to stitch together where trades come from. Guess what? The lazy swing trader uses all this information in an algorithm format to issue the trade alerts. We've got a whole series of winning trades. The thing's been on a bonanza. You're getting the email alerts. You're getting the emails telling you where the profitable trades were. You're getting each and every profit target that hits. You see them each and every day. It's a bonanza. Base hits put you in the Hall of Fame. It's unrealistic to think you're going to get 30, 40, 50, 100% gainers out of each and every trade you put on the board. It doesn't work like that. Maybe with an option, you get 20, 30, 40% right away, and you do. I get 5, 6, 7% out of a stock. You could certainly get 50% out of an option. That is true. Base hits put you in the Hall of Fame. My objective is to give you the prices in the stocks where the market's going to bounce, whether it's going to bounce back up or pull back off of a short opportunity resistance. Either way, my objective is to give you the base hit after base hit after base hit. Some turn into doubles, triples, grand salamis, Whopper Juniors, all that stuff. Another profit target, speak of the devil, TJX. System bought it when nobody wanted it. It was melting down. All of a sudden, you had a reversal. How does that work? It works well. This hit this morning. 4-hour chart, above all the moving averages. The trend is your friend. The question is, will they gap above the breakdown candle high tomorrow, or will they find resistance at the breakdown candle high? They have certainly been eating time off the clock 2 half-day candles, full day, eating time off the clock underneath the breakdown candle high. It diminishes in part the importance from a trading perspective of said breakdown candle high. Write that down. Put it on a sticky note. What about a 2-hour chart? Same routine. Breakdown candle high over here. High is, in fact, the same, 607.03. They've been eating time off the clock above the moving averages, below the breakdown candle high. Are they eating time off the clock to jump above it, or are they going to be rejected? We'll find out tomorrow on Friday. Bullish flaggish pattern on the hourly chart, a little dipsy doodle in the afternoon session into the convergence of the hourly chart, 100 period, 50 period, and 20 period moving average, and a ricochet right off of it. And that happened to coincide with a number that was put on the board early this morning. How does that work? How do you like dem apples? Now, the number on the board at the time I put it on the board had no knowledge or didn't have anything to do with the fact that there would later on be a convergence of moving averages in that place on an hourly chart. No, sir. By the way, take another sidestep. Here's an email I got this morning from Philip M. or Philippe M. It could be Philippe. Thank you, David. Simply effing awesome. Pardon my French. This is on the HSY trade alert. Not to mention the TJX that I just told you about and all the others lining up. Have a great day. Yeah, you too, Philippe. Thanks for the note. I love it. Lazy Swing Trader Automagical Algo System. We've got something for everybody. You want to learn the nuts and bolts of how the market works? We can do that. MSF Masterclass Series. You want trade alerts? Swing Trader? Lazy Swing Trader. You want a day trade? Come in the live room. Or you can just buy Inside the Numbers, which gives you the numbers and the commentary for the SPY each and every day. We've got something for everybody. Happy Thursday. Speaking of Inside the Numbers, any money made today inside the numbers? Well, let's see what we had in terms of a pivot, the numbers, all that stuff. Not much fanfare overnight in the futures. We've got somewhat of a bullish pivot this morning coming in at 604.50. Let's start there. Right of the vertical is today's activity. Here's an SPY 5-minute chart. 604.50 is the horizontal green line, and you can see here, if price is above the pivot, she's bullish. Below, she's not. The pivot is like a fulcrum of a seesaw. And look at that dipsy doodle into the end of the day. Above on candle closes, door opens towards 606.80. Didn't quite get there, but she's working on it. You had a dipsy doodle and a rescue operation. This is called a shakeout operation in the afternoon. How many traders do you think got caught holding the bag in the afternoon? First, we had traders that shorted in the hole as the market was going down. They sold the market, and then they got a pie in the face on the reversal. That's only after traders were long thinking they were going to get another ramp up in the afternoon, and they got the shakeout instead, so they shook them out of the long side. They tried to jump on the short side, and then they got a pie in the face into the end of the day. How many traders do you think that happened to? I'll give you a hint. A lot. All right, check this out. The flip side situation is price getting and staying below the bull pivot, which opens a door for a leg lower or fall back toward 602.75. Give or take. 602.75. About a blue light special at 602.75 put up on the board at 0 dark 30. How you doing? Would you like to know the numbers before the trading day starts? I think so. Those are the highlights. Pause the video, read the notes, go back to the chart and double check the work. It's all in here each and every day as it relates to the SPY, whether you're trading options, futures, options on futures, micros, exchange traded products. It doesn't make any difference. We have stocks on the move. We had Qualcomm and Honeywell today hit their entry objectives. Skyworks Solutions and Form did not. And then we have the list of markets down here. What I urge you to do is put some of these numbers on your own chart and see how the market reacted around numbers in the Qs, the IWM, the SMH, TLT, GDX, crude oil, gold, silver, natural gas, the dollar, or Bitcoin. Any single market, it doesn't make any difference. They don't all hit all their numbers each and every day. These are important numbers, so when they are hit, we have certain expectations. They're either targets if you're long or you're short, or they're an opportunity for a change in direction when price gets there. All that's taught in the course MSF Masterclass series. It all fits together like a glove. It's a big puzzle piece, isn't it? Yes. Right off the stocks on the move list, Qualcomm was getting a buzz cut at the open. We had 167 on the board bright and early. 167 was in fact support. There you go. Once again, the numbers work. Now, I'm not looking here at the end of the day. I'm looking here in the morning session. They spiked it. They rallied back up. They're giving you the trade. They got almost back to 170 off a 167 entry in minutes. How you doing? By the way, Lazy Swing Trader Automagical Algo is short. Qualcomm. How you doing? How does it know? What's going on over in Camp IWM, my favorite market-leading indicator, small cap space? They tried to bust out of this pattern, if you will, if you want to call this a pattern. They tried to bust out over the 50-period moving average, but did sell by the end of the day, finishing down 1/3%. So we have a divergence. The spiders finished up 1/3%. The IWM finished down 1/3%. And if you think about it, their bogey is up here near this breakdown candle high. They get above that and they run to another place. They establish another leg higher if they can bust out over this breakdown candle high. That's the objective of Team IWM. I should say Camp IWM. Weekly chart, still have a divergence in the look between the IWM and the S&P 500, no doubt about it. Same thing with Team Transports. We'll start on the weekly. In this case, you still have the divergence. What they did here was run a test of the weekly, the last weekly chart, breakup candle low in the sequence. You go back to the daily chart and they still can't get above the last breakdown candle high in the sequence. Not just yet. More light bulb moments should be going off if you've been watching my videos for any length of time. I'm divulging how the market works step by step. Other than the 200-period moving average, she's below the moving averages. Trend is your friend until it's not. It's materially different than the daily chart of the SPY. Above trend, above all moving averages, trend is your friend. Transports, below 3 out of the 4 moving averages, different chart. Second favorite market leading indicator, a number 1 canary in the coal mine. What about the Q people? Again, divergence. Now, we have breakdown candle high. She's yet to get above that. If she does, you can count on new highs. But she is above all the moving averages. The trend is your friend. So far, you have a series of lower highs that could change by tomorrow's close for sure. What we're doing is citing what is, in fact, factual information today. This is the umpire calling balls and strikes. Any way you look at it, you have a trend line from highs that the market is putting in lower highs until she's not. The move up recently has been on decreasing volume. Welcome to 2009 to current day's market trading. If nothing's wrong with the financials, move it along. There's nothing wrong with the underlying structure of the market. The financials are basically at new highs. Nothing wrong with the tape. Nothing to see here. Move it along. Smashmouth, or Philadelphia's Semiconductor Index, trying to pose a rescue operation and get back above all those moving averages. She's doing a pretty good job. We'll see what she could do by Friday's close. You look at the weekly chart. What's the objective? It's pretty clear. Get above the 20-week moving average, preferably above last week's high. Put them in no man's land. Opens the door to the gap. Opens the door back to the trend is your friend until she throws your shit out the window. What about the housing sector? If the economy was expanding, wouldn't the housing sector be sniffing it out? Wouldn't the housing sector be rallying? The housing sector, not necessarily below all the moving averages, but the weekly chart certainly isn't at new highs. Doesn't look like the S&P, doesn't look like the Qs, looks more like the transports, and looks more like the IWM or small cap space. Of note, puzzle piece, we're just putting it on the table. This is the HGX, the Philadelphia Housing Sector Index. What about yields? Let's take a look at the 10-year yield real quick. Trump gets elected, yields sell off. That means bond prices rising, yields downward pressure, good for the consumer, good for borrowing, should be good for commercial real estate, should be good for development, should be good for business investment. Everybody's addicted to low interest rates. Everybody wants lower interest rates. So far, we've gotten lower interest rates under the new administration. Last check on Amazon, no turnaround just yet. We'll see where they start out tomorrow morning. They're down about $7 in the aftermarket, down to 232 and change. A little less than 3%. It's not going to be a big deal for the market unless it expands from there in one direction or the other. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.